Hello, welcome back. Mike from Canavan Wealth. It is Tuesday, September 26th. Time for Mike Reads the Journal. Jumping into the markets. Ugly, ugly week. No way to sugarcoat it. Down almost 3.5% since last week. This is really, I think, two reasons. The big driver is the Fed meeting from last week. Jerome Powell, as he often does, did not sugarcoat it himself and said that interest rates were most likely to stay higher for longer, including possibly another 0.25% interest rate before the end of the year, and probably leveling out. I don't think the 0.25% interest rate hike for the end of the year was the bad news. Is really that rates are most likely going to stay higher longer. That is, of course, because the economy continues to do well, and we're not seeing the weakening that we kind of expected through all of this. Um, However, not great news for the stock market if interest rates are going to stay high. The other reason is really probably price of oil coming up, kind of continuing to force inflation high. Some of the reason why the Fed is continuing to probably keep interest rates high. Year to date, now down only up to about 11.8, down about 7% from the recent high in August. So, tough week for the markets. I suspect we're probably going to continue to slip for a couple more days here. We'll see. I don't really see the bottom falling out of this and us going back to kind of early year lows. All right. Oh boy, do I love talking about population, fertility rate, things along those lines. Longtime viewers of the channel will know this is something I talk about, and I have a educational video coming out on a similar topic to this. We're going to talk about it in terms of investments instead of the labor market, but this is talking about the changing demographics in the U.S. and really the world. This is repeating itself everywhere, and why the labor market is going to be in a tough spot, right? So this chart is showing number of people per age. So this is millions of people per age, and they've got the baby boomers highlighted here. And what you really need to see is that since the baby boomer, the population has not been growing dramatic. Each generation below this, the number of people in it is very similar compared to now. This is also due to age, this tapering off. But this chart, if you looked at it, so back to mid 1900s would have been very bottom heavy, a lot more kids than there were adults. Whereas now, really, if you look at any particular generation, there's the same number of people in it, whereas the world is not kind of child heavy. That's because fertility rates have come way down as the world has continued to develop. America is kind of leading that. And so you see this. There's a lot of other charts. I think the second takeaway I want for this to see is that charts can be very misleading. And my biggest pet peeve is repeated constantly throughout this entire article that the charts do not start at zero, right? So labor force participation rate, this looks like there's this dramatic change. The simple truth is it's changing somewhere between 22 and about 25, 26 here at the height, because this does not start at zero. If this graph started at zero, this would look much flatter, be much less dramatic. But apparently that doesn't sell newspapers or online ads, so we don't start graphs at zero. For example, this graph would have looked way more dramatic if they had started at 10 or something, but they properly started at zero. This is at US birth rates per 1,000 people, been declining since really this is the big point, the 70s. This is coming down off of kind of the baby boomer craze. Labor force participation rate. Again, this graph, I mean, look at this. It just looks like a doomsday graph. Well, it starts at 60 instead of zero. Really, this is about a 5% decline or 10% decline here, but they didn't properly start it. At zero, average hourly wage. But this is an interesting one. I saw an interesting statistic about this. Again, did not start at zero. This would look much more flat. I saw that in 1990, foreign-born workers made up 3% of the world's population, and here in 2023, it's about 3.6. So, are we seeing changing demographics? I mean, that is a 20% rise. However, we are not seeing this massive change that so many news organizations want you to think. The number of foreign-born workers is really not that different than it was, and that's an issue, right? Because we are not supplying enough workers from kind of our own reproduction in the developed world. We need more labor coming in from places. All right, in the world of not believing experts, I'm not just going to put it on scientists, but I think it is a generational shift in the U.S. where not generational shift in that one generation is to blame, but just over the last 10 to 15 years, we have lived in this world where there is so much information that everyone can feel like an expert on everything because we can look up information. And because of that, I think there's been this shift towards not believing experts, scientists leading among them. I think there's the we're at like an all-time low of kind of faith in science. And this, although at first might seem like a tough article to help that, I think in the long run is one of the best things that we could see. So this is effectively a group of other scientists that are going through scientific papers and finding fraudulent work, effectively as bad as just made up numbers and busting them. So this statistic here just shocked me. 5,500 faulty papers were retracted in 2022 compared to 120 in 2002. That is crazy to see that. And they kind of attribute it to groups like this that are going out and finding, poor performers. I think the scientific community needs this. I think we need the scientific community, and we need to be able to know that they have apparently need to return to a place of doing quality work that is about the science and not about the awards and everything, because they talk, why some of this has shifted. So really, really great work coming out of a group of scientists here, kind of trying to return at least some portions of science to, kind of what it has always been. Last one here, qualified tax breaks. I talked to a lot of clients about this. Tax break worth the hassle. So I'm going to summarize this article. This shows tax filers claiming charitable donations starting after 2016. So the big change here was when the individual deduction, the standard deduction, effectively doubled back during the Trump era. And that caused it so that very few people were itemizing deductions, because there's a lot of people that were kind of right above the standard deduction, but well below doubling it. And now when a charitable deduction can't be itemized, you lose that kind of tax deduction. However, if you do it as a charitable donation from your IRA, it effectively bypasses that rule. This article goes all through it. Talk with clients. If you have any questions about it, I will go through it. But it effectively allows you to continue to get that tax deduction for the charitable contribution, so long as it comes directly from your IRA. You don't pay the taxes, they don't pay the taxes, and you get the tax deduction. So it's kind of the best of both worlds. I've seen this a lot, especially with if you do annual tithing to churches. This kind of makes a no-brainer, especially for RMDs. Things along those lines, if you don't draw a lot out from your account, you're just doing RMDs and you give to a church or something. It's a really simple thing to do to give you a little bit of a tax break that you probably are not getting. All right, that is it. Tough week in the markets, but I don't think the bottom's going to fall out of this. We'll see how well that ages. I hope this has been informative. I'll talk to you soon.